Americans for Fair Taxation presents the weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida Fair Tax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, April 17th, 2026. More lipstick on a pig. The Van Hollen Booker tax cut plans. The following data is from an analysis prepared by the Tax Foundation. The analysis pointed out that Senators Chris Van Hollen, Democrat Maryland, and Cory Booker, Democrat New Jersey, have each introduced new tax plans that would cut income taxes for lower and middle income taxpayers and raise them for the highest income taxpayers and corporations. Senator Van Hollen's plan would slightly reduce federal tax revenue, losing $86 billion over the 10-year budget window on a conventional basis. Taxpayers in the middle quintile would see the largest increase in after-tax income of 3.9%, while taxpayers in the top 1% would see a 9.7% decrease. Van Hollen's plan does the following. It sets an exemption equal to $46,000 for single filers, $92,000 for joint filers. Qualifying taxpayers, defined as those with income of 175% or less of the exemption, would calculate their ordinary tax liability and their tax liability under a 25.5% tax with the cost of living exemption, paying the lesser amount. To finance this tax cut, the plan would impose a new surtax on high-income taxpayers, 5% on incomes above $1 million or $1.5 million for joint filers, 10% above $2 million or $3 million for joint filers, and 12% above $5 million or $7.5 million for joint filers. The maximum tax exemption and surtax thresholds would all be adjusted for inflation. Now, Senator Booker's plan would significantly reduce federal tax revenue, losing up to $6.7 trillion over the 10-year budget window on a conventional basis without accounting for the unspecified business tax increases. Here's what Senator Booker's plan does. It'll increase the standard deduction to $37,500 for single filers, $75,000 for joint filers, $56,250 for head of household filers. It would expand refundable tax credits by increasing the Child Tax Credit, or CTC, to $4,320 for children under 6, $3,600 for children aged 6 to 17, while providing an additional $2,400 bonus in the year that a child is born, and would make these fully refundable. The expanded child tax credit amounts would begin phasing down to the current law CTC amounts at $150,000 for joint filers, $112,500 for single filers. The child tax credit values would be inflation adjusted. Now, the earned income tax credit would triple for workers without qualifying children by increasing the phase-in rate to 15.3% and slightly expanding the income thresholds. The age range for the credit would expand to cover those ages 19 to 24 and over 65. To partially offset the cost of the expanded standard deduction and refundable tax credits, Booker has specified that the tax rates for the top two tax brackets would increase from 35 and 37% currently to 41 and 43%. He has announced, but not specified, additional tax increases, including increasing the corporate income tax rate and the stock buyback excise tax rate. Though some lower and middle income taxpayers would benefit through lower marginal tax rates under both plans, taxpayers would face worse incentives through higher marginal tax rates. On net, we expect both plans would reduce long-run GDP. In conclusion, the Tax Foundation also published this discussing who pays federal income tax. New Internal Revenue Service data for tax year 2022 showed the U.S. federal income tax system continues to be progressive as high-income taxpayers pay the highest average income tax rates. Average tax rates for all income groups remained lower in 2022, 5 years after the Tax Cuts and Jobs Act, than they were in 2017 prior to that reform. In 2022, taxpayers filed 153.8 million tax returns, reported earning nearly $14.8 trillion in adjusted gross income, and paid $2.1 trillion in individual income taxes. The average income tax rate in 2022 was 14.5%. The top 1% of taxpayers paid a 23.1% average rate. That is 6 times higher than the 3.7% average rate paid by the bottom half of taxpayers. The top 1%'s income share fell from 26.3% in 2021 to 22.4% in 2022, and its share of federal income taxes paid fell from 45.8% to 40.4%. The top 50% of all taxpayers paid 97% of all federal individual income taxes, while the bottom 50% paid the remaining 3%. People earning below $55,000 are in the bottom 50%, and that's the group that pays the remaining 3%. Now, of course, neither of the above plans consider that most people making $55,000 or less pay more in payroll taxes than they do in income taxes, even under their plans. Both plans further increase the U.S. debt, and neither plan addresses the problems with income tax evasion, which is over $1 trillion a year. They don't address the negative impact of the income tax on our exporters and the subsidy it gives importers who compete against U.S.-produced goods and services. It doesn't address the fact that consumption-based taxes increase GDP growth much more than income-based taxes, and they don't fix the Social Security trust problems like the fair tax does. The fair tax is the answer. The fair tax is a national retail sales tax on new retail goods and retail services. It provides a family credit so that all purchases up to the poverty level for each family are not taxed. There's no withholding from your paycheck, and you never have to file an income tax return again telling the government how much you earned and how much you spent. Plus, you'll never be harassed by the IRS ever again because the fair tax abolishes the IRS. Now, many of you have labored tirelessly for freedom from the federal income tax and the IRS. You deserve a great deal of credit for your efforts to educate the American people on the need to fund the American government in a way that's good for America and returns freedom to the American people. It's imperative, though, that we don't replace the current income tax and the IRS with an alternative system that could still be manipulated by the ruling elite. We must let Congress and the President know that the best way to replace the income tax and the IRS is with the fair tax. Now, make no mistake about it. The fair tax is a grave threat to the ruling elites. It will strip them of their power and their ability to control us through the tax system. Their opposition to the fair tax will be fierce and unrelenting. And don't think for an instant they won't use half-truths, deception, and downright lies in their desperate attempts to hang on to their power. However, with the support of this president, we can finally eliminate the income tax and the IRS. Of course, the best course of action is not only to repeal the income tax and abolish the IRS, but to repeal the 16th Amendment as well, so no future administration can ever shackle the American people with an income tax again. We must come together and ensure that real tax reform, the fair tax, is not subverted by the elites in D.C. This will take the diligent effort from all of us. We need your financial assistance, and we need your grassroots assistance. Now, if you have contacts that will allow us to get more information about the fair tax to President Trump, please let us know. Please email us at info@fairtax.org, and we'll give you some options on how you can best help us. At a minimum, please call your congressional representatives and ask if he or she supports the fair tax. If so, thank him or her for their support and suggest they become a co-sponsor of H.R. 25 if they're not one already. If not, ask why not. Now, if your representative claims to be unfamiliar with the fair tax, offer to have someone come to their office and explain it to them. The solution? Pass the fair tax. Now, why would D.C. pass the fair tax and give up an almost unlimited source of donations? Well, they won't, at least not voluntarily. The only way they will is if the rest of us demand it. Isn't it time to end this ludicrous tax collection system and the IRS along with it? Help us bring about real tax reform and stop future IRS abuses. By contributing or investing $10.40 a month, you help provide a financial base to Americans for fair taxation. Now, if you can make larger contributions / investments, these will be used not for salaries, as we're all volunteers, but for the needed updates to our economic studies, which will be vital for all future years. Please go to fairtax.org to invest in AFFT and help us pass the fair tax. It's an investment in your and your family's future.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org.